If you are a break-even trader where some weeks you'll make some profit and the next week you'll give those profits back, and you're not able to derive any consistent profits from the market, your problem might not be your style. Your problem might actually be your impatience and not able to stick to only taking those quality A plus setups. This isn't saying that patience alone is going to make you profitable. You still need to have that real technical edge behind you. What I'm talking about here is that foundation that sits underneath your technical edge. You can have a solid strategy but still lose on a consistent basis. The reason is rarely the strategy itself, and more often because of impatience and taking setups which you should not be in the first place. So, what I'm going to be talking about is something referred to as the quality gap. Whether every trader is aware of it or not, there's a hierarchy of trades that they look at. There's A setups, B setups, and C setups. Your A setups are the ones where everything aligns. All your confluences have been met from a high time frame down to the lower time frame. Your fundamentals have been checked, there's no issues there, you have the green light, and you're good to go and take your entry. So long as you manage the entry properly, you will get the result you should be getting from the market. Next, you have your B setups. These are the ones where most of your confluences have been met. Maybe one or two have not been quite met exactly the way you'd like them to be. Everything quantitatively looks good, but those small qualitative confluences aren't quite the way you'd want them to be. It almost looks perfect if you skew it the correct way. Finally, you have your C plus setups. These are just the ones where you're mostly going your gut feeling. You look at it, that confidence hasn't been met, the higher time frame isn't quite right, there's news coming out in 25 minutes that will probably have some kind of impact on this, but you look at it and think, if it enters in the next couple of minutes, it might push back up again, I'd be able to derive some profits from it. Essentially, you are not following your pre-market entry trading plan and your trade management plan. It doesn't matter how often your A plus setups actually align. What does matter is that there is a correlation between what you saw in your back testing and what you're seeing in your forward testing. So by that I mean, if you do back testing of 6 months, and on average you see one entry per week every single week for those 6 months. When it comes to live market execution, if you are averaging one entry per week for 3, 4, 5, 6, 7 months, etc., then you know those are probably your A plus setups and the ones you should be taking. On the contrary, your B and C setups happen far, far more often. You might see them 4, 5, 6, 7, 8 times a week, potentially every single session. And those are the ones that are going to do the most damage to your account. The damage doesn't come from those A plus setups. It comes from your B and C setups as they eat into the profits which you're deriving from your A plus setups. The losses that you take from those B and C setups, not apparently obvious at first. You think they will be, but they're really not. They're subtle and they slowly eat into those profits that you've been working so hard to get from your A setups. And they often come from two main factors: boredom and impatience. Say you're averaging one entry per week, nothing on Monday. Okay, that's fine. Tuesday rolls around, nothing. Oh, that's fine. Patience is still there. Wednesday, right, okay, you know, we're 3 out of 5 days through the week. Statistically, I should get an entry tomorrow. Nothing comes Thursday. All of a sudden, it's Friday. I've not had a single entry yet. There must be one today. The morning comes and goes, absolutely nothing. You get to lunchtime and you see something lining up. You take the entry, even though it doesn't quite meet all your confluences, minus 1%. That is something you see happen so often in traders these days because they do not have the ability to stay patient and wait for those A plus setups to come around. So what is the practical solution to this? Well, firstly, you need to reframe that boredom that you're feeling, that impatience, as a positive signal. Signal essentially says that you are sticking to the processes, the profits, the percentage, the funding, etc., that you're seeking. That is all downstream of ticking the boxes in that process that you've established that you know will lead to you actually making money from the markets. Stick to the process, the profits will follow as they are downstream of it. It is as simple as that. Another thing, practical wise, that you can go ahead and do is for the next 2 weeks, at least 2 weeks, the longer you can do it, the better. Every time you take a trade, before once the trade, on a practical note, for the next at least 2 weeks, ideally 1, 2, 3, 4, 5, 6 months, as long as you can do it, this should be something that you implement in your trading no matter what, even when you are profitable. Once you have taken the trade, the second it is entered, make a note in your journal of was it an A, B, or C plus setup? And you must be honest. This exercise will only work if you're entirely honest with yourself. At the end of the week, at the end of the month, wherever it need be, have a look at your entries, look, see what was profitable, what was not, and go and check and cross-reference them with was it an A setup, a B setup, or a C setup. What you will find is that those Bs and Cs are deriving far less profits from the market than your As. And even more likely, you're going to find those B and C setups are actually losing you money in the long run. And if you find that is those Bs and Cs that are making you lose money, then the good thing is you don't have a strategy problem. What you have is an implementation problem. And further back from that, what you really have is a patience problem. You just need to find a way to stop jumping into the markets at times when you should not be jumping in. And a great way to do it is be able to go and tangibly look and see just how much money you are missing out on because of your impatience. The market will always give you something that looks like an opportunity. Our job as traders, and specifically risk managers, is to know when it is worthwhile putting up our capital as risk in order to try and derive profits from the market. And the only time it is worth doing so is when all our confluences are met in an A plus setup. Thank you very much for watching.